Unbiased Trades here, and today we're going over the balance between systems and discretionary trading, how it is a important concept in trading, and this presentation will explore how these two approaches to trading can be used to create a well-rounded and successful strategy. From the use of automated algorithms to manual decisions, I will provide insight into the various options available to traders and my experience personally. What is system trading? Systematic trading refers to the use of using predetermined set of rules or algorithms to guide trades with little or no human discretion involved. System trading offers traders the ability to automate the decisions and creates a reliable and consistent approach to the markets. This can be especially beneficial for those with limited experience, which can create intuition in their trading, or those lacking confidence in their current setup. By automating the decision-making process, system trading can reduce the risk of mistakes and human errors while providing traders with the opportunity to take advantage of market movements quickly and efficiently. To be a systematic trader, in my opinion, you don't need a full algo running, as this may be a more inefficient use of resources and time depending on your trading journey. For example, if you are in your first 2 years of trading, I don't believe you need a small caps algo because the time and cost of developing a full running algo in the small cap space would not be worth the payoff. However, this does depend on your market. I'm specifically saying for the small cap space, whereas in futures it is a lot more doable and I would say a lot more cost effective. However, if you are 6 years into trading and profitable with some bankroll, it may be worth investing more time into fully automating your approach, whether that would be to save you time or to completely remove you from the equation, as because you have now refined your setup so much. Now, what is discretionary trading? Discretionary trading involves more human judgment and decision making, often based on experience and intuition. Discretionary trading allows for more flexibility and the ability to react to unique situations. However, it can be more subject to human error and emotional influences. Discretionary trading is not to be shunned, since some of the most deadly traders are discretionary. However, as indicated in prior videos, you must be aware of your own strengths and weaknesses, as well as how long it may take you to resolve those issues. Being systematic was a no-brainer for me because I lacked confidence in my setup due to a lack of historical proof that it worked and that if I actually had an edge. Then, as I progressed, I recognized that rather than allowing myself to mess up a large part of the trading system, I should aim to become as systematic as possible. Now, as I discovered, 100% systematic may not be for everyone, and maybe it will be in my trading future, but currently, right now, where I'm at, I don't think it's for me. Now, what is 100% systematic? It can sound very enticing to new traders, as removing all and any human decision making sounds way better than allowing some of it to ruin your systems. However, as some may learn, being 100% can be very confining in both good and bad ways. You'll reap all the benefits of knowing your system is profitable and will most likely create a similar return in live markets after performing the necessary tests, such as out of sample testing and degrees of freedom that I recently mentioned and explained on my Twitter. However, building and deploying that system in real time can be a headache. Developing a fully systematic system is challenging at first, and I don't mean simply having a macro edge like a red close percentage. I'm talking about full entry, exits, trade management, and so forth. However, suppose you choose to pursue a very basic profitable system, such as a 20% stop shorting at the open with no trade management throughout the day and simply exit at close for all the gappers above 40%. This would be most likely profitable, and I have personally tested something similar, and it most likely would be profitable over 4 to 5 years. But now consider how we may incorporate this into a platform. The first challenge is having a system to locate the number of shares required, then code the execution of an order at open, consider possible open slippage as well, and finally code to check that your range order is still activated and all stops are active throughout the day. Don't get me wrong, all of this appears achievable, and it is, but it will take a month or two plus testing on a sim environment to ensure that any issues are sorted out, and trust me, there will definitely be some issues, and the cost of hiring me or any other developer in pursuing that for you. Now finally, the inability to employ additional components such as tape, intuition, recent market cycle volatility, and context in your trading is the main reason I don't choose to be 100% systematic in small caps. All of the previous points I mentioned, with the exception of intuition and market cycle, can be converted into a dumbed down, quantifiable method to some extent, but all would be lesser than the human operator most of the time. This is why I believe that most traders may benefit from being guided and filtered by data and historical performance, which enables the trader to be the final condition for the trade to be placed. Now, let's dive deeper and see why this could be a con and pro to not being 100% systematic. Now, this is the 80-20 rule. I bet it existed before me. However, I've just recently been talking about it on Twitter. I did go over a brief explanation of this if you'd like to check it out on my Twitter page, which is GhostWalk Trades. Um, and as previously stated, this allows the trader to be flexible and incorporate human intuition into their trading, but not as a primary engager of a trade, which is where I believe many traders go wrong when trading non-edge tickers. Let me give you a quick example of the 80% systematic and 20% discretionary rule and how it can be applied, for example, in my trading. In the morning, I look at my scans, which only display stocks that match my system's macro edge criteria. This means whatever it is showing, I know have a high close red percentage plus a handful of other parts I also look at. Next, I will look at a few other data points that are currently unreliable to backtest or very inaccurate historical data. None of these extra data points will discourage me from trading the ticker, but they do provide more perspective of how it might trade, for example, based off my own intuition, such as low float, dilution via dilution tracker, and a couple other sources. Next, I have a system entry and exit, which helps provide a reliable guide for how each ticker in that setup bucket should be traded. This is also where 20% of my discretion plays a role, as I will know I'm looking for an 8% spike, for example, for this particular gap percentage bucket, and know 30% have no spike at all, so that means they dump straight away from open, and 10% have a spike greater than 15%. This enables me to make a decision based on data-backed statistics. Let's say it halts in the first 10 minutes with 3 million volume. I know that's not how these tickers should typically work, so I might want to back off and wait for a higher spike, standard deviation, or be more mindful that a larger stop will be needed. I hope this highlights the idea of having an overall system guiding and controlling your trading, but not for the final trigger choice. You may incorporate data backed and intuition based context into the trade, and I think that fundamentally makes you a better trader than just being 100% systematic. Obviously, this is my current opinion. I do expect it to maybe change as I evolve as a trader, but currently, from where I'm sitting with about 2.5 to almost 3 years experience, this is kind of how I view the systematic route of trading. Thank you for watching, and if you enjoyed, please like and share it with anyone else who might be interested. Be sure to check out my Twitter and my previous series about my setup if you're more interested in that.